Hello everybody. Welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. In my last video, I said that the gold price would be flat, and that's exactly what happened in the month of March. So here you can see that the gold price stayed flat. And now we have a new update, a new data point. So let's check the graph of the gold forecaster index, which is this red chart. And we see that we are pointing upwards. So we are going positive. So I think that we have a high possibility that the gold price will be going up near the end of the year. And we could also possibly breach the resistance. So if you look at this chart here, you see that the gold price is trying to breach the resistance of $1350 per ounce. And I think we have a chance that we will breach this resistance at the end of the year. And that's because there is a very important event last week. The Federal Reserve is apparently not raising interest rates anymore for the remainder of the year. And it is also stopping the quantitative tightening in September of this year. Now, how does this look like? Let's look at the balance sheet. So the Federal Reserve is tightening here, and it will continue tightening until May, and then it will start to slow down the quantitative tightening, and it will stop entirely in September when we are at 3.5 trillion. And at that point, I think the Federal Reserve will start increasing the balance sheet again with quantitative easing. So that is very bullish for gold going forward. Now let's look at interest rates. So today the Fed funds rate is at 2.4%, and we see that all the maturities here from 10 years till here are all inverted, so lower than the Fed funds rate. And let's look at this here. This is the 2-year treasury. And we also see that this blue line, so the 2-year treasury, has actually gone lower than Fed funds rate. So that means that there is a high probability that the Federal Reserve will decrease interest rates. So it will actually cut rates instead of hike rates. And that's very bullish for gold. Now let's go further here. Let's look at the leading index. The leading index is still trending down. So I expect that the red line, the coincident index, will also follow. And we could see a recession 1 to 2 years from now. But okay, it depends on what the government and the Federal Reserve will do. Now let's look at the trade deficit, which is also a part of the gold forecaster index. We see that the new data point is pointing upwards, which means that the deficit actually shrunk. Okay, it shrunk, but it's still lower than this trend line here. So actually the trade deficit is still increasing, and also the budget deficit is increasing. So I think those twin deficits will continue trending this way. And that's not so good for the dollar, but very good for gold. Let's look at capacity utilization. You see that this trend has reached the top, but it's pretty steady here. It's holding its ground. So I think that the inflation rate will will actually be stable and maybe going up a bit. Now this is a chart of the producer price index and the consumer price index. And the previous time we saw that it was at 0. So nothing has changed here. It's still at 0. So we could see that inflation is very stable, not going up or down. So probably at 2%. And here we have the 10-year yield versus gold. 10-year yield minus the consumer price index. We see that it is going up the blue line, which is not so good for gold. But yeah, we will see what this is doing. If it comes back down, then it would be positive for gold. And that's also the thing that is happening. The 10-year yield is actually coming down. So if you look at this chart here, we see that since November and even January, the 10-year yield is really coming down, which is actually good for gold. Now, a final note here. We are now in April, and April is seasonally a good month going into May and June because the Indians are celebrating festivals, marriages. So this is typically a good month for gold. So yeah, I would urge you to follow this advice as we see that the gold forecaster index has breached into the positive territory. I think this is a pretty good time to buy some gold. So we need to check this, monitor this until next month and see if this trend can keep increasing. But well, this is an early warning. We have the fundamental event of the Fed done raising interest rates, and we have also the breach of the gold forecaster index into the positive territory. So everything is aligned positively for gold, and yeah, this is my advice to investors. So I'll see you in the next video next month.